We value these assets every single year based on the current net operating income and the current capitalization rate for that market and see whether or not it makes sense to sell at the current value. The biggest driver is really investor returns. We try to aim for at least a 20% per annum return for the investor. So if we can hit that target, after a couple of years and return investor capital with profits, we'll pull the trigger. It hasn't made sense right now because of where the values are at and where the market's at. Really, if you're going to sell today, you're going to sell because you're required to, not so much because you want to. Once the market starts recovering, it'll make more sense to sell, so we're probably going to aim for that same 20% per annum return threshold before we pull that trigger. Interest rates, I would say, are one of the key factors into looking to when to sell. I wouldn't say it's the only factor because interest rates help guide transactional activity. But if your net operating income growth is negative or if it's stagnant, it doesn't matter if interest rates go down. You're not going to get a good value on your asset. Looking at interest rates is very key because it helps kind of drive that transaction activity, helps compress cap rates. But you also want to make sure you're selling an asset with an increasing net operating income so that you can show that future value growth to the prospective buyers. As part of the asset management side, we look at property KPIs, trending occupancy, current occupancy, evictions, leases, renewals, etc., to see how the property is currently performing. So if anything comes up where the property is going backwards or is not hitting its thresholds, sit down with our operations team and see what's going on and what can we do to help alleviate the situation. But let's say, we've hit our investor metric for type of returns we want to get, so now the next step is starting to market the property. And obviously if, occupancy is going backwards, you're going to get lower value for your return. So we always want to make sure that when we are marketing the property, that the property has been stable for 3 to 4 months. It's expected to be stable for the next 3 to 4 months as we go through the marketing process. We always watch those KPIs very keenly to make sure, we're not putting up an asset on sale that's going to wobble for the next few months. The hold period for these assets is definitely very important. You don't want to hold an asset for too long where investors' money is just tied up. At the same time, you don't want to sell a deal too quickly where you leave profits on the table. So treading that line is very important, but we don't try to get greedy. Back in 2021, we had disposed of, I want to say 7 or 8 assets at the time. And on those properties, if we had held, an extra 3 months just to juice profits, there could be a good chance we wouldn't have sold those assets because the market turned so quickly. As soon as we were able to sell and hit our investor thresholds, we basically just started the marketing process and started selling. So we'll receive, unsolicited offers from prospective buyers who want to buy our assets. And honestly, we respect the brokerage community a little too much to be able to just sell it offhand just to save a little bit on the commission side. If we are seeing an increased activity of unsolicited offers and we're seeing, that we can potentially hit our returns based on those offers, we might reach out to the broker and engage them to formally start the process. But we would never just, get an email from John Doe that says, hey, we want to pay you $50 million for your property, and we say, sounds great, let's go get the contract started. Investors get a monthly management report that we send out at the end of every month that reports results on the prior month. And in that report, we typically try to give investors an idea of where the property kind of stands in its life cycle, on the entire life cycle, not just where does it stand today on the monthly operations, but where do we sit in general. If we think that a property is going to be in a position to be sold in the next quarter or 2 quarters, we'll start telling investors early on and saying, hey, you know what, we think it's a good time to sell, so we're going to start the marketing process. It takes about 3-4 months to sell an asset. So investors aren't, surprised when a trade is executed. It's more about when we start communicating with them and giving them expectations of what type of returns we expect. So we try to temper as much as we can from a returns expectation perspective because all these numbers are up in the air up until you actually close the transaction. We try to make sure that investors understand, hey, we're going to start the process. Returns are going to be generally in this range. We'll get that all out pretty early in front of investors before a sale happens.